Twilio shares are down over 4% year to date in 2025, and investors are curious if this stock is a buy. I'll answer that question in this video, reveal my fair value calculation, and deliver the latest developments on Twilio according to the management team.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So in its most recently completed quarter, Twilio highlighted that second quarter revenue came in at $1.228 billion. That was up 13% year over year. They also generated a record amount of income from operations at $221 million. If you divide the $221 million by the $1.2 billion in revenue, it has an operating margin of about 20%, a little less than 20%, and that figure is improving. Free cash flow of $263 million is better than the income from operation, highlighting the company has some non-cash expenses like stock-based compensation. In more good news, the company's second quarter dollar-based net revenue expansion rate or net retention rate was 108%, reflecting improving growth trends seen in their communications business over the most recent several quarters. That means existing customers are spending more with Twilio in their second year of service compared to their first year of service. And that's always a good sign for the company's customer value proposition. The company highlighted that they are taking market share in their core communications market, led by accelerating messaging and voice growth. They saw their messaging revenue mix increase by 62 basis points, which is the primary driver of their gross margin decline in the second quarter. Note that their messaging business generates a lower gross profit margin than the voice business. But the company expects their margins to improve as they announce price increases in both messaging and voice in the United States, and they're also investing at the platform level to ensure they're delivering their services efficiently. And that's always a good thing to do when you're initiating a price increase. It's good to also add more value to your customers so your customers feel like they're getting more value for the dollars that they're spending. By the way, this highlighted conference call transcript is available for my channel members, and you can join for less than $5 a month. So I updated my fair value calculation for Twilio. I now calculate this business to be worth $117 per share compared to the current market price of $103 per share. Even after applying a margin of safety of between 5 to 10%, this stock still looks undervalued based on my DCF calculation. So I updated my recommendation for Twilio stock. I upgraded this stock to a buy, and I updated that recommendation on September 29th, 2025. I've had Twilio stock rated as a buy for a little while now in 2025, and it's been underperforming the S&P 500 index. The recent developments, according to the company's management team, with accelerating revenue growth, increasing customer retention, and improving profitability, bodes well for investors in this company longer term. In the near term, there may be additional headwinds as enterprises look to cut spending and be conservative in all areas except for artificial intelligence, where the bulk of the investment from companies is coming from. Businesses fear a recession as consumers face higher costs, and so they're being more cautious. Longer term, though, Twilio operates in a growing market with a competitive product that should do well as businesses increase investments in these categories. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.